Grade 10s, welcome back to another video. So I will be doing a revision series with you guys. We will be I will be doing a revision series in the following subjects: so accounting, business studies, economics, mathematics, pure maths, and I will also do maths literacy, and we will also cover physical sciences and geography. So please don't forget to like, comment, and to subscribe to the channel so that you know every time that revision video is posted. So we're going to be doing this revision videos for over a period of 2 weeks, probably for grade 10 specifically. So in today's video, we'll be starting with this Eastern Cape paper for November 2023. And this question paper was downloaded from the Stainmore website. So you can go and get yourself this copy of grade 10 accounting paper 1 final examination for 2023. And you can go do it and maybe come back and watch this video, or you can just stay tuned for us to do this video. So the total of this marks paper 1 for accounting is 150 marks. The duration is 2 hours. So here are the instructions. This paper consists of 4 questions. Answer all questions in the special answer book provided. Show all workings to earn part marks. So it's very important. An exam tip that I will give you is that when you are calculating something, like in your income statement, you have your income statement, show some calculations. Don't just write your final answer. Show calculations, because sometimes your answer might be wrong, but the steps you had taken to take that to get that answer are correct, and your teacher can give you that. Your answer in your calculation is correct, but the one that you've entered in your income statement by mistake is wrong. So your educator will give you marks for that one, because your calculations are correct. It's just an error that happened. So I would advise you, stop writing only the final answer. It's not working. It will not work for you. Start also writing your calculations. So those are all. You may not use a programmer or a calculator. You may use a dark pencil, or so those are all. And here are the sections that we'll be doing: transactional analysis, salaries and wages, and then statement of comprehensive income. For transactional analysis, it will be the what is this? Accounting equation, yes. And then for statement of comprehensive income, that's your income statement. And statement of financial position, it's your balance sheet. Balance sheet analyze the financial position of a business, so that's why it's called statement of financial position. And interpretation of financial information, those are gonna be your ratios, right? So as you can see, interpretation of financial statements have the most marks. It's 40 marks, but there are 3 marks to be made here. So let's see question 1, transaction analysis. We have transaction analysis, and then we have salaries and wages. So analyzing transaction. The transaction appear in the books of Universal Stores for September 2023, and required analyze the transactions according to the heading provided on the table in the answer book. Be guided by the example provided. So that is question 1. We'll come back to it. I'm just showing you the rest of the question paper like this. So the question 2 is statement of comprehensive income. So we have GAAP principles. I hope you know them. And we have wild code traders. So in grade 10, we only do financial statements for sole traders. So there is the beginning, the pre-adjustment trial balance on the 28th of February 2023. I know it might not be the way you are used to it, because it's so small compared to the one you've done during the terms, which was like huge, almost a full page or a full page. And then we have adjustments and additional information, which will help us answer these questions. That is the end of question 2. And then we have question 3, that is statement of financial position. So the information relates to Merlin Traders for the financial year ended 28 February 2023. So we're going to prepare the owner's equity note for the statement of financial position and then complete the statement of financial position on 28 February 2023. Show all workings in brackets were relevant. So this is a post-adjustment trial balance. So for the income statement, we use a pre-adjustment. So this one, a post-adjustment, it has been done after the income statement. So everything, all the year-end transactions have been taken into account. That's why it's called a post-adjustment. So all the adjustment, year-end adjustment, have been done when you have, it's just a few things that are not done. So so as to help you calculate, but a post-adjustment is the one that we use. It's those calculations you see in the income statement are the ones that will just be transferring. The post-adjustment trial balance will just be transferred also to the income statement. So year-end adjustments have been taken into account. That's 30 marks. And then we have interpretation of financial information. So there we're going to be calculating those ratios and answering those questions. And then we have extract from the income statement for the year, extract from the balance sheet, financial indicators, and that is a total 40 marks, 150. And then we will be given this financial indicator formula sheet. They won't tell you which one is which. You have to know. So let's get the first video. I'll be dealing with this income statement, then we'll do the balance sheet, guys. So yeah, I think after that I'll see whether I'm doing the ratios or I'm going to question 1. Without wasting any more time, let's get into it. And please press that subscribe button. It helps the channel. Share with your friends if you're enjoying this. Please subscribe. Please subscribe. All right, let's start with statement of comprehensive income. So for 2, we're going to start with 2.1 gap principles. So you'll just be writing the answer. Match the example in column B to the gap principles in column A. Write only the letter A to E next to the question number 2.1.1 to 2.1.4 in the answer book. So in column A, we have accounting principles with historical cost, business entity, going concern, and prudence. So let's try to see which one is historical cost. Remember, it says all historical cost says all assets should be recorded in their historical cost in the financial statements. So we need the original price, the price that it was bought for. So that's what historical cost says. A says account of data is written off. No, it does not. B says decisions are taken on assumptions that the business will exist. No. Income and expenses are accounted for in the relevant financial. No. The insurance on owner's personal vehicle is recorded as drawings. No. Buildings are recorded at the original invoice price, although the market price may be higher. That is true. You record your assets, which is your vehicles, your equipment, your land, in the original cost in which you bought them for. If you bought them for 500,000, they will be recorded for 500,000 for as long as they remain in the business in your balance sheet. So historical cost matches with E. And then we have 2.1.2, which is a business entity. So the business entity rule says the affairs of the owner and the business should be kept separate. So we need to look for that. So account of data is written off, although efforts will be made to recover the amount. No. Decisions are taken on the assumption that the business will be in existence for a long time. No. Income and expenses are accounted for in the relevant financial year. No. This says the insurance on owner's personal vehicle is recorded as drawings. Yes, drawings are things for the owner and are separate from the ones of the business. So she has taken something from the business but is written as drawing. So that's business entity rule. And then we have going concern. Going concern means that the business will continue in future. There's an assumption that the business will continue in future. So for business entity, it's number D, and then for 2.2.1, historical cost is E. So going concern is that business will continue in future. So let's see. Account of a debtor is written off, although efforts would know it's not that. Decisions are taken on the assumption that the business will be in existence for a long term. That is going concerns. So we take decisions based on an assumption that this business will continue to operate in the future. And then when we have things like insurance, also that's what makes us know that, okay, the owners are serious about this business and they wanted to continue. So, and then we're gonna be going to prudence. So let's see which one matches with prudence. Number A, account of data is written off, although efforts will still be made to recover amount. Yes, that's prudence. So prudence is that every transaction is recorded in its original financial year. So we have wild cost, yes guys. So for 2.1.1 it's E, for 2.1.2 is D, and for 2.1.3 it's B, and then for 2.1.4 it's A. We're done. So the wild coast traders, we're dealing with wild coast traders. The information related to the financial year end 28 February 2023. Complete the statement of comprehensive income for the year ended 28 February 2023. So extract from the pre-adjustment trial balance on the 28 February 2023. We have loan from Alpha Bank. We have trading stock. Sales is a question mark, which means we have to calculate it. We have cost of sales. We have salaries and wages. We have depreciation. We have rent income, interest income, bad debts recovered, packing material, advertising, insurance, and sundry expenses. So let me tell you here which ones are incomes, which ones are expense based on the trial balance, because they didn't tell us the debit or credit, nominal, and whatever. So we have sales, we have trading stock, it's a balance sheet item. The loan and the trading stock is those ones that we say balance sheet item. And then from sales, when you have sales, you know that is the nominal section. From sales is the nominal section, things that go to the income statement. So we have sales, which we have to calculate. We have cost of sales. We have salaries and wages. Those are expenses. Salaries and wages can never be income, guys. We have depreciation. It can never be income. It's always an expense. We have rent income. Just by saying rent income, it is an income. We have interest income. It is an income, but that goes down there on interest income. It does not go in other income. So for rent income will go to other income. We have bad debts recovered. Bad debt is an expense, but when we see recovered, bad debts recovered, then bad debts recovered is other income. Packing material will always be an expense. Advertising expense, insurance expense, sundry expense. It just says itself, it's sundry expenses. These are things you did in term 1. Sundry is all the small things that we can't open an account for. They're just small minor things that we paid for, so we don't have a major account for, like for salaries, advertising, and all those things. So we just classified them under sundry accounts. That is what sundry account is. So adjustment and additional information. Let's see. We need to start with sales. Let's see. The business maintains a profit markup of 50% on cost of all goods sold. Right? So the business maintains a 50% markup. You know about that. For the amount of goods sold, you just add 50%. Goods sold on credit on 28 February 2023 was not yet recorded on the last year of the financial year. So there were goods sold at the end of the financial year which have not yet been recorded. And the cost of the goods sold was 14,500 rand. So these goods that were sold but were not yet recorded, 28 February, it's still within the financial year. It's the last day of the financial year. So the cost of the goods sold was 14,500. We are given the cost. So you are going to take the cost of sales amount, which is 2.9,336,500 rand, and then you add the 14,500 rand. I'm gonna show you that. So for cost of sales, we had 36,500. That's how much we had, and then we're gonna add the goods which were not recorded, which is 14,500 rand, like that, and then close the bracket. This is how we are going to write that calculation. So we have dealt with adjustment number 2, and then let's go down. We don't write a total yet because we don't know if there is another adjustment that will pop up with regard to that. They say no entry were made for a donation of slightly damaged stock costing 6,900 to a children's home. So no entry were made for those donations. So donations is an expense, right? We took stock and then donated it. So we have to write that as well. So that is 6,000. What is 6,400 rand? Okay, that was 6,900 rand to the children's home. And then annual stock taking on 28 February 2023 revealed the following. So when we say annual stock taking revealed the following on hand, it means when the business, when we went to the storeroom, right, and counted the amount of stock that we have as trading stock. Trading stock is the stock that we use to resell, but packing materials can just be items that help us, maybe boxes that help us pack our stock that we sell, right? So that is packing material. And so with regards to trading stock, how are we going to manage this 392,400? Is that we're going to go to our trial balance and look at trading stock. Trading stock in our trial balance is 416,400, which means the one that appears on our pre-adjustment is the one on the computer. The computer, when we are busy, people are coming to buy and we're scanning their products, right? Tilling. In the computer, it says we have 416,400 rand, right? But when we go and do a physical stock count, this is where we find out that we only have 392,400. So there's a shortage of stock, which may be due to theft, right? So what you do, you take let's remember that adjustment number 2 says goods sold on credit on 28 February 2023 was not yet recorded. So the cost was 14,500. So this goods that were sold were not subtracted from the trading stock. And again, we made a donation of slightly damaged stock costing 6,900 rand. So that is where the difference is. In this case, nothing was stolen. We just donated and sold, and those transactions were not recorded. So you will take the 416,400, you subtract the 14,500 rand, you subtract the 6,900 rand, and then you subtract the 39,000 the 392,400 rand. Yes. In your expenses, you will write operating expenses, trading stock, and then you open a bracket, and then we'll write that calculation. It is 416,400 minus 14,500 minus 6,900 rand minus 392,000 400 rand. Yes, that is how you do it. So for packing material is what we use to pack trading stock. So it might be boxes, plastics, and all that. So let's look here. We only expense the packing material that we have used. So okay, packing material, it's packing material that we have bought is 27,300. So the packing material that appears on the pre-adjustment trial balance is the amount of packing material that we've bought, and then this one that is on hand is the amount of packing materials that we have bought. So we bought 27,300 rand and we didn't use the 3,800 rand. So the 3,800 must be subtracted. It's not an expense. It was not used that year. So we take what we've bought minus what we are left, and that is the expense. So let's do packing material. And yeah, that is 27,300 rand minus 3,800 rand that was on hand. So a debtor V Mesh was declared insolvent and we received 3,480 from his estate. This was 30% of his account. So we only got 30% of what he owed us, and the balance must be written off. So we have to find out what was the 70%. So here you can say the 3,480 times 70 over 30. We need 70%, we have 30%. So you can just say 3,840 times 70 over 30. And that will give us 8,120. Or you can just say so this is how you'll calculate your bad debt, and what you'll get is 8,120. The other calculation, I'll just show it here. You can say x times they are the same. Let's not use x, let's use u. Yeah, let's use u times 30 divided by 100. That's 30%, right? It's equals to 3 is equals to 3,480. Yes. So we need to solve for u. So you are going to have 30 here, divide by 100 u. So practically 30% u, and then that will be equals to 3,480, and then you divide both sides by 30%. 30 over 100 is 30%. So when you divide both sides by 30%, you're going to be left, it will be cancelled. You will have u, this side, is equals to 3,480 divided by 30%. And then when you put that into the calculator, you say 3,480 divided by 30 divided by 100, which is 30%. You're going to get 11,600 rand. And then you take 11,600 rand that you get, and then you minus 3,480, you still get 8,120. Yes, so we have dealt with that. And then a 6 months advertising contract was ended. It's an a 6 months advertising contract was was entered into on the 1st of January 2022. So the amount of 4,800 rand for 6 equal monthly installment was paid in full. So what this means is that a 6 months advertising contract was entered to in the 1st of January 2022. So this year ended 28 February, this one that we are doing. So which means it started on the 1st of March. When the financial year ends today, let's say it's the 15th of September, the financial year ends. The financial year starts tomorrow on the 16th of September. So if it ends today, it starts tomorrow. So it ended on the 28th of February. Don't mind leap year. When it say it ends on the 28th of February, it means it starts on the 1st of March. So it started on the 1st of March 2022. So, and this contract was entered to on 1 January. So 1 January 2022 and February 2022 out of the financial year. So we have to minus those 2 months. So what we are going to do here is, they said for 6 equal monthly installments. So just divide that 4,800 rand by 6. You'll get 800, and then say 800 times 2. That is 1,600. And then you'll say 4,800 minus 1,600 rand. Or say 4,800 times 2 over 6. And you will get the amount that does not include those 2 months that belong to the last financial period. For advertising, sorry, I didn't see, I stopped recording. You just take the 4,800 rand times 2 divided by 6. So for rent, let's say the tenant pays a fixed monthly amount for rent. He, however, did not pay the February 2023 rent, stating that he paid 3,500 for repairs to windows. This must be offset against the rent due to him. As repairs, it is responsible. As repairs is the responsibility of the person. So when someone has rented your place out and you are not repairing, and they repair what you should have repaired, they do not owe you rent. So the rent income on the trial balance is 36,300 rand. So we just have to add that one for repairs. The rent income, that 36,300 is only for 11 months. So you're going to divide the 36,300 by 11. You will get 3,300 rand. That's how much the person pays per month. And then you will just add it for the 12 month. With is the month of February is the last month of the financial year. So because they did repairs, we just have to add 3,300 to their rent income, to their rent account so that they have paid for the whole year. All right, so we'll say rent income, right? And that will be 36,300 rand plus 3,300 rand. So that will be for rent income. So again, the monthly insurance premiums were increased by 175 per month with effect from 1 December 2022. So in the insurance premium for February 2023 was not yet paid. So the monthly insurance premium were increased by 175 per month with effect from 1 December. So the financial year ends on 28th of February. So it was December, January, and February. So for 3 months, we had an increase on insurance. So you're going to go and look for the insurance amount on the P adjustment. The insurance amount is 36,100 rand. Then you minus 175 times 3 for those 3 months. So that's 35,575, right? So that is the insurance premium increase. You have taken it out. It's 175. So the insurance premium for February 2023 was not yet paid. So you're going to minus 2 for December and January because those ones are paid. So you will say 36,100 minus 175 times 2. So that will be 35,750. Then you divide that by 11 because only 11 months were paid. Then you will get 3,250. Then the 3,250 plus 175 will be the new installment for the installment that has not been paid. So that's what will be added. You have 36,000. So when you add 3,250 plus 175, that will give you 3,425. So that's how much will be added then. So that's 37,300 rand minus 3,800 rand. So how we got this? We said we took the amount that is on the trial balance for insurance, which is 36,100, and then we subtracted the 175 times 3, 175 times 2, times 2 for the month of January and February, and then we got 35,750, and this amount we divided it by 11 months. So we haven't paid for February, so we divided by 11, and then when we divide it by 11 months, that's where we have to take out the increase because it was not consistent throughout, so that we can get how much was paid before the increase. So that will be 3,250, and then we add the 175, which gave us the 3,000. It has to be, it's not 3,800. It has to be 3,425. Yes, that is the calculation. Now we have to get interest capitalized. Interest on loan is capitalized and has not been recorded yet. So the loan statement from that bank on 28 February 2023 reflects the following. Balance on 1 March 2022 was 642,000. Total repayments, including interest capitalized, is 158,400, and then interest capitalized we don't have. Then balance on 28 February 2023 is 5,500. It's 55,000. It's 553,800. So you're going to take the 553,800 rand, and you will add the 158,400 and then subtract the 642,000. You're going to get 70,200 rand. That is interest expense. So here is it on the menu. We have 553,800 plus 58,400 minus the 64,200. You got the 72,200 rand. So these are the things we've done so far. Rent income, we have written it, and we have also included we've done packing material, we've done advertising, we've done insurance, we've done bad debts, we've done trading stock, and the interest expense. So the last one says, after all the adjustments were made, the net profit for the year was accurately calculated as 875,000. So that is the amount you're going to put on accumulated depreciation. So for cost of sales, it says the business maintains a markup of 15% on all cost of goods sold, right? So we're going to take the 2,936,500 rand of cost of sales and add this 14,500 rand. So that's how much has been sold, and then we're going to multiply that by we're going to add this 50%, so we'll say 150 over 100. Wow. So the 2,936,500 of cost of sales plus the 14,500 will give you that amount on top for sales, 2,951,000. So you times that by 150%. So you'll say 150 times 150 over 100, and that will give you 4,426,500 rand. So that is how you will calculate it. So we have done sales, cost of sales, gross profit, other income, rent income. The bad debts recovered, you take it exactly as it is from the trial balance and put it here. And then also salaries and wages, depreciation, donations, repairs, they didn't have any adjustment, so you just took them. You had to take them the way they are. Packing material, advertising, insurance, bad debts, trading stock deficit, we have done the calculations. And then we have you took also sundry expense as it is. Operating profit, so sorry, sales minus cost of sales equals to gross profit. That's how you are going to do it. And then other income plus gross profit equals to gross operating income. So you take gross profit and you add your other incomes. Your other income is rent and bad debts recovered. So you add gross profit and other income, you get gross operating income. Then you get gross operating income minus operating expenses. That will give you the operating profit. And then you will add interest income, and operating profit and interest income will give you gross operating. Again, will give you profit before interest expense, and then you minus interest expense, and that will give you net profit. Net profit had already been given to you. So this is how it should look. This video is 40 minutes already. It's too long. So let's do the balance sheet on the next video. Thank you very much for watching, guys. Don't forget to like, comment, and subscribe. Share with your friends.